Welcome back to Teshkid FX for another price prediction update, and in this video I'll be giving you a price prediction update on Polygon Matic, whose current price stands at the $0.8865 mark, and here on TradingView the market is down by 0.63%. And in this video I want to give you the short-term and the long-term scenarios that I'm expecting to play out, basing my analysis on the Elliot structures and the Fibonacci's. And allow me to kickstart the video here on the daily chart by giving you a brief of what has been happening here on the Polygon Matic chart. So Polygon Matic, from these low prices that we had been trading within, we saw a very nice bounce to the upper side, making it to an all-time high at around the $2.9 mark in a movement that I'm terming as a higher Elliott wave count 1 to the upper side. And after seeing the all-time high, we had been seeing this massive ABC corrective structure over here in the formation of a higher Elliott wave count 2, and that ABC corrective structure took us back to around the $0.32 mark. And after making that low, I believe we have completed the formation of that high Elliott wave count 2, and very soon I'm expecting that bounce to the upper side in the formation of that higher Elliott wave count 3 before we see a wave 4, and then continue pushing even higher in the formation of that wave 5, and sketching out a minimum target area to the upper side in the formation of this wave 3, using a trend based Fibonacci, connecting it from the low of the first wave to the high of that wave 1, then dragging the Fibonacci's to the low of the second wave. That gives me a minimum target area to the upper side in the formation of that wave 3 at the fib level 1.618, and that perfectly lies at around the $5 mark, and that is the minimum that I would expect Polygon Matic to do in the next bull market. And that is my long-term scenario that I'm expecting to play out in the formation of that wave 3. And because a wave 3 is an impulsive wave, we also expect to see fractal waves in formation within that wave 3. And jumping to the 4-hour chart for further analysis, here on the 4-hour chart you can see I have this Elliott wave structure in blue, which represents the impulsive nature of that third wave to the upper side, and I believe we have completed the formation of that first wave to the upside. And right now my primary scenario is that we're in the formation of this second wave before we continue pushing even higher in the formation of that wave 3. And because a first wave to the upside is an impulsive wave, we also expected to see fractal waves in formation within that wave 3. That is that first wave to the upside, and that is what I've represented over here in this Elliott wave structure in yellow, which is a fractal wave within that higher Elliott wave count 1, completing the, having the wave 5 completing the formation of that first wave to the upside. And after seeing the formation of that first wave to the upside, whatever we expect next is a bit of a retracement to the lower side in the formation of a higher Elliott wave count 2, and I believe that is what we have been seeing over here. And because a wave 2 is a corrective wave, we also expect to see an ABC corrective structure in formation within that second wave. And there are two ways we can have that ABC corrective structure on this chart, and that is what is going to give me my short-term scenarios that I'm expecting to play out. And giving you the first possible ABC corrective structure that we can have on this chart, we can term this movement from this high of the first wave to this low as a massive wave A. Then after seeing that wave A to the lower side, whatever I'm expecting next is a bounce to the upside in the formation of that wave B, before we continue pushing even lower in the formation of that wave C to fully maximize the formation of this second wave, and getting a minimum retracement area to the upside in the formation of this wave B using the Fibonacci's, connecting them from the high of this wave A to the low of the wave A. That gives me a minimum retracement area to the upside in the formation of this wave B between the fib level 0.5 and the fib level 0.618, and I can mark that target area here on the charts, which perfectly lies between the $1.08 mark and the $1.02 mark. And that is the minimum that I'm expecting that wave B to the upside to do. And once we fully maximize the formation of that wave B, then we can continue pushing even lower in the formation of that wave C. And for us to continue pushing higher in the formation of this wave B, there are key areas on the Fibonacci's that we need to continue holding above, and using the Fibonacci's so that I can give you that target area that we need to continue holding above, connecting them from the low of that wave down there to the high of that movement over there. That gives me a minimum target area which we need to hold above for us to say that we're in the formation of this wave B, and that is the area between the fib level 0.382 and the fib level 0.618, and I can mark that target area here on the charts, which perfectly lies between the $0.88 mark and the $0.83 mark. And you can see we saw a reaction of the fib level 0.382 over here and started seeing a very nice bounce to the upside. And in case we continue holding above this target area and also manage to break above the key area of resistance at around the $0.95 mark, and once we manage to break above it, see a retest, which is a success, and then continue pushing even higher, then there are chances of fully maximizing the formation of this wave B before we expect an impulsive movement to the lower side in the formation of that wave C to fully maximize the formation of the second wave. And in case we lose this target area that is between the $0.88 mark and the $0.83 mark, then my other ABC corrective structure will be playing out, and I'll have to term this movement over here having this as the wave A. Then we saw a wave B making our high at around the $1.17 mark, and then whatever we have been seeing over here in this movement right here, these I'll be terming it as a wave C. And once we lose the target area between the $0.88 mark and the $0.83 mark, then we can continue pushing even lower in the formation of that wave C to fully maximize the formation of this second wave, and that will be a straight sell-off over here, because in the formation of a wave C we expect to see an impulsive nature in the formation of that wave C. But in case we lose these key areas on the Fibonacci, that will be a straight sell-off and it won't be obeying the Elliot. That is the 5-wave structure to the lower side. So those are my two possible scenarios that that ABC structure can play out. And from what we are seeing over here, you can see we have lost the 20-day MA here on the 4-hour chart, and we are also trading at the lower side of the channel that we have been trading within over here. And there are chances that in case we manage to break out of the channel to the lower side, there are chances of managing to get into this red target area, continue pushing even lower, lose the fib level 0.618, and once that happens, we continue pushing even lower to the key area of support at around the $0.78 mark. And in case we lose that key area of support, then my massive ABC corrective structure will be playing out. So let's be patient and see how that plays out. Also taking a look at the indicators to see what movements will be supported here on the RSI. On the RSI, we are trading at around the 36 mark, meaning we have massive room for us to support any movements to the upper side, and also any movements to the lower side will still be supported before we get into the oversold region. Also taking a look at the MACD. Here on the MACD, you can see we had printed a bearish crossover here, and we are also seeing an increase in the selling momentum, and that means lower prices are coming our way, and we might get into this red target area between the $0.88 mark and the $0.83 mark. And in case we lose that, then my massive ABC corrective structure over here will be playing out. So let's be patient and see how that plays out, and I'll keep you updated.